Guess what?
Good news?
Great news.
Let's go.
13.79 on a 2001. What? Let's go.
Why is Lee crying today? Well, because I just bought a car this morning from CarMax.
All right, I've got a few interesting clips today. Again, they're all about cars and financing. This one might be a little bit shorter than usual because I'm still in the middle of moving. Over the next few weeks, I'm going to try to add some other finance content to the channel. I want to test a few different ideas and video lengths and see how they do. If they don't perform well, I'll move them to another channel and keep this one how it is.
Carlos, looks like I have a customer on the Corvette.
Really?
Yep.
Let's go. Finance, cash?
Finance.
Finance. It's a tough car. That is on consignment. Selling it for a friend. So it's an older Corvette, but it's priced to the market. You know, I've looked up on a lot of different sites. Those cars sell for roughly around 22 grand. Just because of the miles. That car's garage kept, it's black. I mean, you can see how perfect it is. The only problem we might have is obviously book. That's why those are kind of cash cars. A lot of collector guys buy them and stuff like that.
This could get expensive before they even look at his credit. Once a car reaches a certain age, fewer lenders are willing to finance it. That means fewer loan options and less competition for the buyer. And when there are fewer lenders to choose from, the interest rate usually goes up. He may still get approved for the Corvette, but even with decent credit, he'll probably be paying a higher interest rate because of the car's age.
But is it the kid right out there?
Yep.
All right, so he put in an app?
Yes. Can you take a look at it?
Yeah, it's going to just be tough just because we got to see how we can get the value of this.
Well, he has 4,000 down.
4,000? Okay. I'm looking at the app now. Wow. He's got one piece of credit. He's got a great score, 759, but he's got one piece of credit. It is a high limit. We might need a little bit down, but we'll call it over and see and just pray because, again,
his credit score looks great, but there's only one account behind it. That makes the number look a lot stronger than the actual credit history. Lenders want to see how you've handled different types of debt over time. With only one account, there isn't much there to judge. So the score might be high, but it doesn't carry the same weight as a more established credit file. It's a great number with very little supporting evidence.
The book value on it is going to just kind of stump us. So we might have to ask the bank to, pull something up for us. So let's submit it over and see what we got. Guess what?
Good news?
Great news.
Let's go.
13.79 on a 2001. What? Let's go. So, good news is I'm going to need 4,500 down. Not 5 grand.
Okay.
Not 4 grand, 4,500. But payment's going to put them at 48 months at $454 a month.
The approval comes back at 13.79 and he reacts like they got him 0%. I understand being happy that somebody approved it, but 13.79 is a terrible rate. At almost 14%, a big part of every payment is going straight towards interest. The approval may be worth celebrating. The interest rate definitely isn't.
Why is Lee crying today? Well, because I just bought a car this morning from CarMax, Chevrolet Trax 2019, and I learned it doesn't have cruise control. And you're probably like, why the hell are you crying over cruise control? Because I literally can't drive without cruise control. And I'm going on a road trip next weekend for 6 hours, and I'm not doing that trip without cruise control, and I just bought this car. So everywhere I look online says you can add that. A lot of Chevrolets don't have cruise control, but it's something you can add on the steering wheel.
This is why you check the features you actually care about before signing anything. Cruise control is pretty easy to notice during a test drive. If it matters enough that you refuse to drive without it, it should have probably been checked before buying the car. Instead, she found out after the purchase. Now she has a 6-hour drive coming up in a car she says she won't drive. The only thing moving forward right now is the loan.
And so I ring CarMax, and I'm like, hey, I just bought a car from you guys, and I want to talk to the service center and want to know if cruise control is something I can add. And they're like, no, we can't do that. And so then I called the Chevrolet dealership around, and she's like, that's not even possible. That's not a thing you can do. So now I'm confused and I don't understand, and I don't want to have to I have 10 days to take this car back, but I don't want to take the car back because what are they going to give me, my old car? And I don't want that car. That car's a piece of shit. Who the makes a car without cruise control?
She managed to rule out keeping the car, returning the car, and driving the car. So the options are opening up nicely. The manufacturer is now being blamed for not including features she never checked for. Apparently the car was supposed to know what she wanted. It really let her down by being exactly what she bought.
Hey, Dan, I got a woman here on the Chevy Trax, and she just put in an app. Can you check it out?
Yeah, let me take a look. 511 score. Pays her credit cards on time for the most part. The only kind of real negative I see is there's an open auto on here that she's 30 days past due on. What's up with that? Why is she late? What's going on there?
She just got in an accident.
It's totaled?
Yeah, it's totaled out.
She's still 30 days late on it though.
Yeah.
Whether it's totaled or not, I mean, until it's settled, she has to pay that.
The car being totaled does not cancel the loan. She still owes the balance until the insurance claim is settled and the lender is paid. Until that happens, her regular payments still have to be made. Falling behind only damages the credit she now needs for another car. The accident took the vehicle off the road. It did not take the loan off the credit report.
I'm hopeful that someone buys this, especially if we can prove that that's a total loss. What are we doing as a down payment here?
She has $1,000 to put down.
Okay, let me submit it and see what we got. No one's biting on her. Red X's across the board. I don't know if it's because of the open auto. So I don't have anywhere to go, man. Unfortunately, like, we will need a cosigner. I have nowhere to go. Not with $1,000 down, not with $3,000 down.
Right, so I just talked to her. She doesn't have a cosigner. She had that total loss. She doesn't have a way to get around. She's been Ubering everywhere. It's obviously very expensive.
She has $1,000 for a down payment, but no cosigner. That's going to make this difficult with a 511 credit score and a late car payment. Before putting all that money towards another car. Part of it probably should have gone towards catching up on the loan she already has. A larger down payment can help, but being current on the loan would have helped more.
I feel bad, but...
I feel bad too. All right, I'm going to try a Hail Mary here. Let's see if it works. We got this new bank that we've been selling all our vans through pretty much, and he's been on me about, like, let me get some other business besides the vans. Let me try it. They're a small local bank. Let me just, on a whim, throw it out there. It's a Hail Mary. Honestly, it really is, but let me see what I can do. Hail Mary worked.
Yeah?
Yeah, kind of. He bought it. He's looking at it. He's like, oh man, this is tough with the open auto, da-da-da-da-da.
When the salesman calls it a Hail Mary, the terms are probably not going to be very good. The bank knows this is a risky loan. They're not approving it because they suddenly feel generous. They'll make up for that risk somewhere in the deal, probably with a high rate, a long term, or both. The approval solves the immediate problem and creates a much more expensive one.
I'm like, dude, you're on me about getting you more deals. Here's a deal. Make it happen. As long as we can prove that the vehicle's a total loss, that we can get $2,500, not $1,000. I need $2,500 to make this deal. They're hitting me with a pretty large lender fee, but I'm fine. I'll eat that. I want to help her out as much as I can. $2,500 down, total loss letter. We can get that. We're good to go.
It's a stretch, but she can make the $2,500 work, so we're good to go.
If $2,500 is already a stretch, the payment probably will be too. The bank is asking for that much down because the application is weak, and she's still behind on the loan she already has. Finding more money for this deal does not fix that. It just gets her into another car. The hard part now will be keeping up with it.
You guys will never believe how much negative equity my customer had. Let's talk about it. So my customer came in the other day and they wanted to trade in one of their EV Kias that they bought. They wanted to come get one of our RX hybrids because, you know, they drive super smooth like butter. Well, fast forward, they love the car. We're going over the numbers, but they're like, yeah, Keyshawn, there might be a problem with my trade-in. I owe a little bit more money than what it's worth. Now, keep in mind, he said a little bit. Yeah, no, it was a lot of bit. She said the customer owed about $75,000 and this car was worth maybe $32,000.
The car is worth about $32,000 and they still owe $75,000. I don't even know how you'd start that trade-in conversation. The dealership would need to find somewhere to put more than $40,000. And unless the next vehicle costs about the same as a house, that probably isn't happening. They came in looking for a different car. They may want to start by finding a different loan balance.
Oh, that's like $40,000 in negative equity. He was thinking his car was going to be worth somewhere close to 60 to 65, and it just hurt to have to break it to him like, hey, brother, you got to love this car right here because you're definitely an owner. You got a firm grip on that car. It's a lesson to y'all boys. Stop buying them electric cars and lease them if you're going to, because you're going to end up with negative equity. At the end of the day, the bank don't care about feelings. All they care about is money. So make the right decision.
There really isn't much they can do with this. The loan balance is way too high to roll it into something else. Selling it would still leave a massive amount unpaid. Trading it only moves the problem into another loan. So unless they can come up with a lot of cash, they're keeping the Kia. They wanted a different car. They're probably leaving with a better understanding of how long they'll have this one. That's it for this one. Thanks for watching. I'll see you in the next one. Bye.